Investors, welcome to Stock AI Insights. I'm your chief AI analyst for this earnings analysis, and today we are breaking down SUIG Group's really pivotal third-quarter earnings, which dropped on November 13, 2025.
All right, just a quick reminder before we jump in, this is all for educational purposes. It is not investment advice, and of course, all investments carry risk. Okay, let's get into it, because this report, well, it's not your average quarterly update. This is our first real data-backed look at a company going through a pretty radical transformation. I mean, moving from the world of traditional finance straight into the heart of digital assets.
So, just to set the stage, SUIG Group Holdings wasn't always SUIG Group. It used to be Mill City Ventures, a specialty finance lender. Now, it's completely reinvented itself. It's now the industry's first publicly traded SUA-focused digital asset treasury. So yeah, this quarter's report is our first chance to see the hard data and find out if this huge bet is starting to pay off.
So, how did this big strategic pivot actually hold up in its first real-world test? Let's start by looking at the top line, the revenue. The company has a totally new way of making money now. They're staking their SUI token holdings. And this is a complete 180 from their old business of just collecting interest on loans.
So, what did this new engine actually produce? Well, in the third quarter, SUIG Group brought in just over $1 million in total revenue, but honestly, the number itself isn't the most important part here. It's where it came from. Every single dollar of it came from their new SUI staking operations. And the company was super clear about this in its SEC filing. They said, and I quote, that staking is intended to be their primary revenue strategy. It's kind of like they've ripped out an old familiar lending machine and plugged in a brand new crypto-powered engine that's built to do just one thing: generate yield from their digital treasury.
Now look at this chart. This just lays out the whole transformation perfectly. In Q3 of last year, 100% of their revenue came from portfolio investment income. Fast forward to this year, it's 100% from SUI staking. You really don't see such a clean, dramatic operational shift like this in a public company's revenue stream year over year. It's pretty incredible.
But, a new revenue engine is going to come with new challenges. While that top line shows the pivot is generating cash, the bottom line tells the other side of this story. And it's a story all about the market volatility the company has decided to fully embrace.
And yeah, it is a pretty stark story. SUIG Group reported a net loss of $44.3 million for the quarter. That right there immediately makes you ask, wait a minute, with over $1 million in new revenue, where did this huge loss even come from? The contrast to last year is just wow. In Q3 2024, the company actually had a net income of almost $500,000. This year, it swung all the way to a loss of over $44 million. So let's unpack what's really driving that reversal.
So what was it? What drove this massive loss? Well, it wasn't the usual suspects like salaries or rent. Nope, the answer is tied up in the very assets that now define who this company is.
This slide here really gives us the answer. So look at this chart with me. That unrealized loss on their digital assets for the quarter was nearly $61 million. To be clear, this is a loss on paper that comes from a drop in the market value of their holdings. And as you can see, that one single item absolutely towers over all their other expenses combined. Things like stock compensation and professional fees just look tiny in comparison. This right here is that volatility factor in action.
And look, the company isn't hiding from this. They address it head-on in their filings. This quote pretty much tells us that their entire business is now, by design, tied to the price of SUI. So this quarter, it really wasn't just another earnings period. It was the first big stress test for this new model. And the data is clear. When the token's value dropped, that translated directly to a major paper loss on the income statement.
Okay, so with this new reality, what's the game plan moving forward? It's probably no surprise they didn't give specific financial guidance, but their filings do lay out their core priorities pretty clearly for us.
And this is where we have to make a really important mental shift in how we look at this company. SUIG Group isn't trying to maximize traditional earnings per share anymore. Their stated goal, their new North Star, is to maximize SUI per share. What that means is their main focus is on getting more tokens for their treasury and supporting the whole SUI ecosystem. It's a strategy that's built on the belief that that is what will create long-term value, no matter what the short-term price swings do.
And they are going after that strategy in a big way. By the end of Q3, SUI Group was holding 106 million SUI tokens in its treasury. At the time, those holdings were worth over $344 million.
And look at this chart, because it really captures the incredible speed of this change. At the end of 2024, the company had exactly 0 digital assets on its balance sheet. 9 months later, it held almost $345 million worth. That's a complete teardown and rebuild of the company's entire financial foundation, all in less than a year.
So, what's the verdict based on all this data? I think this quarter shows a successful pivot in action. They turn on a completely new revenue stream from staking, and they prove the model works. But that success was immediately put to the test by the very market volatility they've chosen to live with, and that led to a pretty big, though unrealized, loss on the bottom line.
So this all leaves us with a really big question for the future. Now that they are all in on this new model, how is SUI Group going to balance its main goal of maximizing SUI per share with the wild price swings that are now basically hardwired into its financials? It is going to be a fascinating test case to watch, and our analysis will definitely be tracking it. If you found this breakdown helpful, go ahead and drop a 1 in the comments. We'll see you for the next earnings analysis.